Hey guys, welcome back. You're still tuned into Trading Hour. For the markets, we're still seeing a 50-point cut on the index. So it is 17,550. That's what we have on the Nifty. But the main pain is really coming through from the banking names. So the Nifty Bank, after recovering, in early trade from the opening levels, has again completely lost that. We're down 400 points in the Nifty Bank, 1 entire percent gone there, led by several of the larger names. We'll talk more about that. But first up, let's get a corporate conversation going. We have LG Balakrishnan. That is the stock on our radar now after their earnings. So the company saw muted revenue growth this time around. It was absolutely flat. The gross margin has also remained quite constant at around 54%. But, it was the high employee expenses this time around, which has actually impacted the EBITDA margin. So to discuss how the quarter really looked and the outlook going forward, we're joined by B. Vijayakumar, who's Chairman and Managing Director of the company. Mr. Vijayakumar, thanks a lot for joining us. This is Pavitra. It has been quite a muted showing this time around, but if you could just break it up and tell us what kind of volume growth you saw in this quarter, in Q3?
Good morning to you. We've grown the last quarter by about 8%. I had said earlier that we will continue to grow at 10%, but due to market conditions, we've grown by about 8%.
So how much, 8% is the volume growth that you've seen versus what you had earlier predicted of around 10%. Can you tell us if what you're seeing in the market in terms of demand is something you expect to continue? And what is the kind of volume growth you can expect for the full year?
We will continue to target 10%. I think we may have to be satisfied with about 9%. We've done 1,600 crores now. I think we will reach 2,150 crores. Maybe about 30 crores less than what we had estimated.
Okay.
But the market continues to be good in India. The American market is becoming very cost competitive. And the growth in the US market may affect our growth also a little bit.
Sir, exports is about 12% of your revenues, right? And that's where you are seeing some pressure, overseas market?
Yes.
Okay. So could you elaborate in terms of when you say that the overseas market is getting price competitive, what exactly is happening over there? Does it necessitate you to bring down prices?
A good thermometer is our subsidiary in the US in Detroit. Our company, GFM, has faced some cost pressures. The salary levels have gone up, the input costs have gone up, the turnover has not increased proportionately. So we see some amount of pressure and some inflation in the US.
Okay, that's an important point to note, and thank you for sharing those details with us, Mr. Vijayakumar. So that could perhaps explain the slight dip we've seen at the EBITDA margin level as well. Now, let me take this question to your capex plans, because you had fairly significant capex lined up, 200 crores in FY23, 150 crores next year, and I think another 125 odd crores in FY25. Given what you're describing and what you're seeing in the US market, will you be rethinking any of this capex? I'm not sure if any of it was being deployed towards that market, but any change in these figures?
No, ma'am. We are not changing anything. We will continue to invest because we have started investing in our industrial chain plant. And we can't stop in between. We will continue to finish the project. Totally, we will spend about 250 crores on that project.
What's the incremental revenue? I mean, what will be the execution period for this capex to come on stream? And some ballpark sort of back of the envelope calculations in terms of incremental revenue then?
The plan should be ready. I had indicated June, maybe we will be delayed by about 2 or 3 months. So by September, we should start production. We have already started selling some amount of industrial chain. And over the next 2 years to 3 years, we will definitely reach the equivalent of our investment in terms of turnover from there.
All right, got it. Just one final question, Mr. Vijayakumar.